I want to find a great deal before rate cuts because
Agreed.
that's going to spike demand and increase prices. And I don't want to pay the higher price. And I'm not saying I'm going to buy it and refinance to a lower rate. I want a deal that makes sense with the high rate that I have now.
That's the way to do
before prices spike. And I know they're going to spike if rates do continue to come down.
All righty, folks. I want it to be known that 2 months ago with the one and only Lance Lambert, Resi Club, I indicated that the housing market was going to finally bottom. I declared that August 2025 was going to be the bottom. And then I said that September 2025 will actually be better, an improvement over 24 and 23, and that will initiate getting housing off its ass. Housing, if you don't know, has been a subtractor from GDP for the last 3.5 years. Housing is about to be a positive impact to the American economy, and most people don't see it coming. We're going to talk with Matt and Dion and see if I'm all wet or I'm early or I'm talking my own book and see what these young guys think. Matt, you were first today. What do you think? Buyer's market's ending? Am I just crazy?
Too soon. Too soon. It's slower. I learned that by losing $1. It's slower than you think.
It's slower than you think.
It's going to be, I think it's going to be slightly slower. The only reason is because obviously it's a national number and we're all preparing for winter. We're all preparing for winter. So, anything that's not in beautiful Las Vegas or in
Texas or
California, for the most part, we're all preparing for winter. So, we're in the 40s at night already. Yeah,
you don't have to live there, right? That's just optional.
It's true. It is optional. But it was that cold and Gary. It was that cold and Gary when we were there, so it was not warm. But I think that it's too soon. I think we're still going to get a little bit of medicine. Okay. Obviously, it depends on the size of the rate drop, right? If we get a 0.5 point, there's definitely going to be a jump, right? But how long will that jump last?
Okay.
I'm seeing rents down. Craig Carson reported some rents being down 30%.
Wow.
Yeah. Okay. That's what Craig Carson said. I was like, what?
I'm not seeing that, but okay.
No, not seeing that. Yeah, no. But we're seeing, we are seeing down, 5 or 7% or, but we're seeing still plenty that are going up. So it really depends on the asset. But I think largely the speed of the market this time of year is going to be based on something that has nothing to do with the actual housing market. It's going to be something to do with the rates and what's going on there.
Yeah, and that's what I see coming. It's going to be very interesting because I like making declarations, putting it out there, not changing my mind and being right or wrong. But the one thing I will say about this is, you know what? It was cold last year, right? Yep. The beauty about saying September will be better than 24 and 23 is you don't have the weather effect, right? Because it was cold both times. So any kind of incremental improvement, it'll show up in the numbers. And, I think we're going to get there. But Dion, what are you seeing in your neck of the woods? You're shopping. What are you seeing?
So I'm actually actively shopping. My live stream last night was on why I'm buying in today's market. And for me, it isn't that it's a buyer's market or a seller's market. I mean, that pendulum doesn't swing and tell me when to buy and when not to buy. What it does is tells me who's paying closing costs, who has more power, in
who's buying down,
concessions. Right. So I'll pay attention to buyers or sellers market for that once we're under contract. But one thing that I'm really enjoying is not enjoying. That's the wrong term. Because I'm not that selfish. I hear rent softening. I saw Coach Carson's video, some reasoning why 30% rent decrease and Matt seeing a softening. I'm in a state where the year that rents are softening almost market wide, they instituted rent control and rents skyrocketed here. I was 10 to 15% below market. I'm now 30% below market. So the 7% increase in any tenant turnover is going to make me a phenomenal amount of money.
Yeah.
So thanks for everybody who voted for that.
Is that mean, so you're seeing people obviously now they're going to stay put because their option with you is it's going to go up 7.5%.
But if they move,
7%, but if they move, it's going to go 20 or 30.
I have no tenant turnover unless they're buying a house right now. I sent out an email in January this year saying, if this bill doesn't pass, there's no rent increase this year. There was a couple that adjusted utility stuff. But if this bill, labeled the bill, passes, there will be a 7% increase at renewal, which for a lot of them was kind of, just this month and next month, because as we come into winter,
summer,
at the end of summer, right? And no one batted an eye. Absolutely, totally understand. Because I did the binder strategy too. I was like, hey, look, this is where you're at for rents. What we're seeing now is a lot of owners that I know are just not renewing with tenants. They're just saying, no, we're going to rehab the unit. You have to get out.
Yeah, that's what, that's one of the things that landlords sometimes do, right? You could rehab the unit, do a full turnover, vacate. You can move a family member in, or the owner could move in, right? There are ways around that. So yeah, it's pretty interesting. But I'm curious, you've been shopping, or at least hot in the market for a couple of weeks now. Have you seen any changes? Like I'm hearing from folks across the country that they had targets in their buy box that just disappeared over the last weekend. What are you seeing?
So there's a couple that have been on the market for a while that I'm watching that have issues to solve. So I'm waiting until my price hits.
Right.
But the other ones that I'm looking at are pending really quick. So I might currently, with the market the way it is, I'm probably going to go back to the way I was before. I want to make a quick offer and then probably get outbid.
Right.
And then tell them I'm in second position.
Yeah.
And half my portfolio was acquired with that from 2013 to 2020. That's the strategy that worked for me.
Yeah. And again, that's let's be honest, that's not a strategy you use in a buyer's market. That's a strategy you use in a seller's market. Fair?
Yeah. Yeah. I think the demand is there. I almost wonder if it's remote work is now finally stabilizing, where the people who are working remotely, because those are the markets I went to. I went to the markets where rents went up, but prices didn't, because remote workers weren't buying. But now it's been 3 years.
Right.
They're probably feeling like this is where they're going to be. So there's more competition. So in my market, that seems to be true.
Yeah, very cool. Well, again, some data we got this morning, and again, I felt this yesterday and have some videos talking about it, but data we got this morning, mortgage demand. And again, I want you to realize this mortgage demand was when rates were 6.5. They're now 6.3. So we saw a 20 basis point drop before this data. We'll see this data next Wednesday. Refi demand up 12% week on week, 34% year on year. Purchase demand up 7% week on week, 23% year on year. And again, I'll say this is before the big drop to 6.3. So we've been saying for years rates matter. What's the magic number to pull people off the sidelines? And every basis point pulls more and more people off. And we got a shockingly deflationary PPI reading this morning, which means negative, folks. If you don't know what deflation is, we do have a CPI print tomorrow, which could reverse all of this in a heartbeat if it's nasty. But the Fed's on the cusp of rate cutting. There's a current odds of a rate cut are 100% there will be one, 88% of a quarter, 12% of a 50. And the market's now calling for 6 rate cuts in the next 15 months. So we're on a rate cutting cycle. Matt, what do you think?
No. Just like they were expecting 7 this year.
I remember.
Yeah. Remember? It's going to be 7, 2025, the year of the 7. Yeah, the year of the idiot. It wasn't even close, and it won't be even close. And there will be probably, I would say, what do they have? 4 more meetings the rest of the year? 4 total?
3. Only 3 left.
Yeah. So if they got, you might be a point, and that's if things get really nasty and bad in all the readings. If growth is bad and jobs are bad, and like if everything's coming back as bad, you might get a point. But
that's 4 cuts.
That's right, correct. And so that would be huge. But I don't think you're going to see that because inflation's going to kick in.
Well, you got deflation this morning, buddy. Negative numbers are negative numbers.
Yeah. Ask every single person if they're paying more for everything they buy, though. Right?
Yeah,
the real people.
The real. Yeah.
The real people. Yeah. So it's like the stock market's nice and Bitcoin's cute, but let's talk about groceries. Let's talk about what people are actually paying at the pump. What was amazing was, you cross the border, and I see it where I am, in New Hampshire, we're paying under $3 a gallon. You cross over the border into Mass and it's $3.30 to $3.50. That's all taxes.
Oh, wow.
And it's the same thing in Chicago. It was high 3s. And then you cross over the border to Indiana, it's low 3s, high 2s. So literally just across the board, and you can see it. It's like that. And that's a blue state, red state tax thing and how they create revenue. So it'll be interesting to see, because everybody that I talk to and all the tenants that I see, no one is doing well financially that's less than $80,000 a year.
Well, that's why I think That's so I agree with all of that. And that's why I think big cuts are coming. And again, let's be clear. I was the guy that was standing tall with no cuts in 25. Remember, I was beating that horse for 9 months. But once I realized the job numbers 2 months ago were just this atrocious and this off, I'm like, fuck, just screw it. They're going to go 50. And again, right now I'm, for a long time, I was the only guy calling for it, right? The odds were 0. Yeah. Now they're up to 12%. But Dion, what are you seeing out there?
So here's the caution that I'm giving myself, right? This is for me, the investor. There's 2 things that tell me when to buy. It's not the market. It's not prices. It's not rates. It's not rents. It's, am I ready? And did I find a great deal? And I'm ready. I'm ready to buy. I was on hold for a few things I was dealing with, but those are done. And so I'm ready to buy. And now I'm looking for the great deal. The caution is I don't like to time the market. Right. I like to just those 2 things dictate buy a deal. I think every deal I bought was in a year where everybody was saying don't buy because of XYZ reasons. Right.
Yeah.
You'll see that in the Bigger Pockets keynote. It was never a good time to buy. But if rate cuts are coming, let's say Powell is on his way out, right? And the chair doesn't make all of the decisions, but he has a larger sway than the other people.
Largest influence for sure.
Yeah. Right. Largest influence. And Trump gets in whoever he wants to that's going to make rate cuts. I'm ready to buy. And here's my emotion. I want to find a great deal before rate cuts because that's going to spike demand and increase prices. And I don't want to pay the higher price. And I'm not saying I'm going to buy it and refinance to a lower rate. I want a deal that makes sense with the high rate that I have now.
That's
before
the way to do
prices spike. And I know they're going to spike if rates do continue to come down.
Yeah, it's really interesting. Again, as somebody who studied the economy for 30 years and housing for probably 25 years, right? I think the economy is in far worse shape than the headline will make it look. I think as an economist, the data we've looked at for forever is frankly in today's world too much of an aggregate, because what we're really seeing is the top, let's call it 20, maybe you call it top 30% of folks doing really, really well, asset owners doing really, really well, and everybody else not. But when you aggregate all that stuff together, the haves and the have-nots it's kind of all coming out in the wash like, oh, the economy's okay. But it's really not. Back to your point, Matt, right? The have-nots are struggling.
Getting crushed.
And I look at that and I go, okay, what do we do? What does the government do when 7 out of 10 people are hurting and 3 are ecstatic? What do you do? And again, they only have so many tools, right? They can play with rates. They could send stimmy checks, right? They could do here's a tax rebate from the tariff money. I mean, they could send checks again, right? They've done it before. But what do we do? So I just don't know. What I thought I heard at Jackson Hole, and Powell is never clear on purpose because you never want to be somebody who's trapped. But what I heard him say with my little Fed translator, was jobs over inflation, especially today with deflation. I mean, talk about inflation not being a problem. It's freaking negative, right? But jobs are horrible, right? We created, 20,000 jobs. We lost another 911 that just vanished, that were never existed. And I think the job market is much worse than people are letting on, Matt.
Yeah, I mean, it's what you and I talked about it earlier in the year and late last year. And I said, I expected that by the end of last year that we would be at close to 5% for unemployment. I think that personally, I think the number's wrong. Personally, I think we're past 5%. But
the U6 is 8. I think it's 8.1.
Right. I think the overall number is going to get above 7.
Oh,
it's going to, I'm telling you, job. And that's what's going to drive things. Jobs. That's why Powell's talking about that now. But that was the forecast that I had, was 5 for last year. And I think we can get up to 7 this year. I think we still have a chance because all of the end of year stuff, everybody's having to print their final number for their final quarter. Right. And we know that number comes out in February-ish. And I think that there's going to be a lot of companies that are going to do a lot of layoffs, sadly, around the end of the year, to make sure that they're off the balance sheet and that they have a fighting chance to hit Q1's numbers. I think there's going to be a lot of disappointments in Q4. And I just think overall, I mean,
Well, let's
came-
play with that. Let's just say let's say the unemployment rate goes to 6. We'll split the difference, and we'll
Yep.
say it's 6 by April of 26. Right.
Sure.
So I don't know. What's that? 6 months from now?
Yeah.
7.
Which is fast.
Yeah, it's fast. That's
But-
yeah. I mean,
right.
but again, the job market breaks like an elevator.
It does.
Right?
It
goes
does.
up. It just, I mean, look at the charts. It goes parabolic.
Yeah.
Here's my call though. So again, there's always the other side. Because again, the Fed is only expecting 4.5. So for it to go to 6 would be shockingly bad.
Mm-hmm.
But I think the Fed has told us what they would do. They'll just take rates to 0 again.
Yes. I think that changes some things, but as being in the world of AI and RPA, that was the world I lived in from a tech perspective.
Yep.
When you stand up that type of technology to replace a department and go from, like IBM did, 800 people laid off in HR.
Yeah.
Are you hearing that, HR people? You better be nicer to your talent. 800 people got laid off there. And the thing is when you stand that up, that took a year to a year and a half to stand up.
For sure.
And what we're seeing is we're seeing that technology come online faster and faster and faster. But you ain't seen nothing yet. You ain't seen nothing yet.
Yeah, I think
There are a
Salesforce
lot
CEO
more.
said 40. I think he said something like 40% of the work is being done by AI now.
Did you hear him? Did you hear what his follow-up to that was?
No, I missed it. What did he
His
say?
follow-up to that was something to the effect of, we are not going to be hiring any more developers.
Yeah, exactly.
Stop. No more. And they might be AI guys.
Yeah,
They're not going to be
prompt
normal
engineers and all that. Yeah.
And so the other thing is, there's a lot of companies that outsource that to Bangalore, India, and things like that. Some in Romania, some Russia, depending on the company. Some Chinese, not very many. But that's where you kind of look at that stuff and you go, the job market for white collar.
Yeah, I agree. Dicey.
And that's where I think you're going to see a much bigger hit in A-class stuff.
Yeah, I like it. Yeah, I think AI is there's going to be some surprises in AI, and it will absolutely ripple to real estate. It's funny when you look at AI today, it's just basically making a lot of people in Silicon Valley rich. So what you're seeing in San Jose and Mountain View and Los Altos and Los Gatos, these are cities in and around Silicon Valley, is housing is flying. Yep. Right? 7-figure housing is flying because everybody's rich. I mean, I think the average person in NVIDIA is worth like $10 million now.
It's crazy.
Right? So, lots of money sloshing around the Silicon Valley. So, but Dion, back to the buyer's market being over. What are you kind of your closing thoughts, where we go, employment, all that?
So there's one thing that gives me a lot of confidence in the type of portfolio that I built, and that's targeting Class C properties, the working class. I think it's going to be a blue collar economy with AI hitting more. I mean, there will be some AI impacts to smaller businesses, but most of those are just going to be, they're all hiring around us. I've seen people change jobs in the last few months that have had jobs for years for a pretty good increase in pay. Not the Silicon Valley type. I'm not in that sphere. I'm in the truck drivers and cops and teachers kind of people.
Sure.
And there's a ton of demand. And so as you said, buyer's market versus seller's market, I'm in buying mode. And I'm looking, I would not buy a Class B property. I would not buy a Class A property, no matter how good the math is. Let's say I found a Class A that had a higher return than my Class C properties. I still don't
touch it.
Too big of a swing during economic downturns. And so I know my buy box, and I stick in my lane, and I'm excited about the next purchase. And
it's funny.
Happens.
Yeah, it's funny, guys, because I don't think I've told you guys this privately, but I wish Lennar, right, the house, the builder of the home that I live in, is having problems blowing out inventory. So they actually created an investor site. And long story short, there was a community right near me, a couple of miles away, that they had 3 homes left. I was actively negotiating a purchase of all 3 homes. Without getting too specific, significant volume discount. They were going to finance it. I had to bring 25% down. They were going to give me 2 months of free rent. Right. They were going to basically give me 2 months. Basically, I was getting everything I wanted. We were negotiating probably. I was trying to be a little dickish, probably in hindsight, but I was trying to get another 15 grand, right? $5,000 a house off. And I got a call. I want to say it was Sunday morning. It might've been Saturday morning. I think it was Saturday morning, saying, sorry, Michael. All 3 houses are sold. They're all pending. So I'm seeing in real time
Mhm.
what just a little bit of interest rate change happened.
Mhm.
And again, this is only one person's experience,
Sure.
but you know, it's funny. Vegas has all problems, but all three went pending it, you know, I don't know, within 3 or 4 days. So I don't know. It's the housing market is changing. Rates matter. If rates get to 5.99,
Oh, well, then you still have buy down.
yeah,
If it
and
gets to 5
again,
to 9, you still have buy down to probably 5
dude, you
and
could be in the
3/4.
fours, dude. You could be in the fours.
Could be.
You could be, right? If you 8 credit, 20% down, you
Sure.
could be in the fours. So I don't know. I think the buyer's market is ending. I want to be clear, it's not over. September, I again will say will be better than the last 2 years, which is not saying much. But again, it's the start of a trend. I believe the housing market is starting to heal itself, and it will start being a positive contributor to GDP this month. And for the next several years, every month will be positive. Again, it's not a snapback. It's not a V-shaped recovery. It's probably more like a Nike swoosh, right? Where it's just slow and steady up. But that's what I'm calling. And, you know, I'll die on that hill and we'll see if I'm right or wrong. Matt, where can people find you?
Lumberjack Landlord, 9:00 p.m. Eastern time on Thursdays. Wasn't on last Thursday because I was on a plane. But this 9 p.m. this Thursday, I will be there
Awesome.
answering your
Thanks so much.
questions.
And Dion, where can they find you?
They can find me on Amazon, Financial Freedom for the
Yes.
Lazy Person. The mind dump that I did of 10 years of reaching financial freedom into bite-sized content.
Everybody's raving about the book. Everybody. I hadn't heard one negative thing.
I've
Somebody
had
called it better than Rich Dad Poor Dad. How about that?
I saw somebody that said it replaced Rich Dad Poor Dad in their
Yes.
most recommended book, which is a cool compliment to get.
Yeah, there's no one better. There's no one better. And you will be in our school community in about 40 minutes, given the dry run of the BP podcast. So that's
correct.
Our
The
presentation.
keynote on it will never be a good time to buy.
I love it. Guys, you're amazing. Take care. Thanks again.